Hello everyone, this is today's video analysis for September 19, 2019. Today we're taking a look at the AUDUSD, the Australian dollar versus the US dollar for today's trade analysis. Starting here on the daily time frame, currency pair has been in a downtrend for quite a long time. You look here, zoom it out a little bit more, blue trend line, black trend line, 100, 200 period moving average, all indicating a bearish trend here for the Australian dollar. Nothing really has changed in that aspect. It's still a downtrend. Let's go ahead and zoom it in a couple of times, and you can see the last leg of the downtrend pushing from where the black circle and the two trend lines converge all the way to the lowest low. We had a little period of congestion here, another tap of the low into the yellow zone, 67.20, 67.05, a little bit of a retracement rebound back towards the 100 period moving average, and this blue shaded area, 68.65, 68.80, sat there for about a week. And in the past 2 days, we've seen a return to the downside. The bears come back in and begin sending it back lower. Yesterday, falling from 68.65 back down underneath the 68.30 level. Today, opening underneath 68.30 and continues that bearish pressure now underneath the 0.6800 level, the green shaded area. So with that, we have two choices. We're either looking for it to find support here at the green zone and turn around and go back up, or we look for the continuation of the bearish sentiment right now, and we look for it to continue to go down, break through the green zone, and continue to go down, challenging back down towards the pink zone. So we're looking for a setup. We're looking for information that will improve our confidence that this is going to continue to go down or turn around and go back up. That's really what we're trying to figure out here. We can use all kinds of clues for that. Multiple different kinds of indicators, common indicators like stochastic, MACD, Bollinger Bands, applied to multiple different charts. You can use moving averages. You could use pivot points. All those indicators are there to do is prove your confidence in one of these two scenarios. It either bounces off the green zone to go back up or breaks through it to continue to go down. So we're watching for clues and evidence to that. No matter what indicator or tool you use, that's what you're trying to figure out. So the setup is we're looking for currently it to stay underneath the green zone. If that bearish momentum is going to continue, are there clues that it's going to continue to go lower? Let's take it on down to the 4-hour time frame. And what I'm looking at here on the 4-hour time frame is the fact that we are underneath 67.95, the 0.68 level. The current, we have two at least 4-hour candles or periods that have now opened underneath 0.68 and that 95 level, the green shaded area. The last time that was doing that, and let's just put another circle back here, is the last time we were above the green zone and broke underneath it right here where the blue circle is, you can see we made a new low. And so that's what technical traders do. We look at history, no matter if you're looking at an indicator or price action, we look at history and say, hey, if this happens again, again, indicators, let's say stochastic. If you have a particular outcome with a stochastic indicator, you're looking for that to happen again into the future. If you're looking for a price action, you're looking for that to happen again in the future. And so that's what we see. We see this blue circle. The market was coming down pretty strongly, pushed underneath the green zone, never got back above it before turning and making a new low. Came back up, bounced off it a couple of times, made new lows. Finally, over time, eventually, let's just move this black circle down here. It did the opposite thing and got above it right here. So again, it works in both ways. Here at the black circle, we got above it. So in the current market, again, right here on the right, we see it underneath that green zone. So that improves our confidence again that we may be looking for it to continue to pressure lower under that green zone. The risk is pretty simple. The risk is at this point in time, we don't want it to get back above the green zone. So if we sell under the green zone, our risk is it gets above the green zone. So we don't want it to do that. So we place a simple stop above the green zone. So if we sell, let's say 67.95, right at the green zone, you're only looking 20, maybe 25 pips for risk if it were to get back above it. But if it doesn't, our profit target, and again, zooming back in time, is the pink zone. We look for it to go all the way down to 67.55.45 because that's what it did last time the blue circle happened, and it went down here. So again, all of those clues are things we're looking at for today's interaction with the Australian dollar. We'll also take a look at the USD later in the trade room, see how it is responding to news and information that's happened in the past couple of days. But that may also give you some improved confidence here for this currency pair on the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.